Many countries around the world are looking into a CBDC or central bank digital currency, with some countries having already implemented them, such as Nigeria, to others which are trialling them, such as the EU and China. And in 2023, the Bank of England and HM Treasury asked for feedback on a planned CBDC to be implemented in the UK, which will be called the digital pound. We then heard at the end of January 2024 through a 72-page report that I'll include a link to in the description to this video, that it had received over 50,000 responses to this public consultation, many of whom criticised the plans, so a big well done if you were amongst them. And these concerns highlighted a lack of privacy and infringement on individuals' rights. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. And let's jump straight in and look at the UK government's CBDC plans in more detail. In response to the criticism received in the public consultation on the Bank of England and HM Treasury's plans for a digital pound, based on the 50,000 responses that it received, the UK government has gone away and stated that it would only launch a UK CBDC after legislation has passed through both Houses of Parliament, so the House of Lords and then the House of Commons. There would be another public consultation in future that will take place, in which you could have your say before this legislation is put forward. Also, the Bank of England and UK government has committed to never accessing user data through this digital pound. They wouldn't make the digital pound programmable money, and they'll keep cash as part of the financial system moving forward. So the digital pound would essentially be an additional option. But as we know, this could change in future. The digital pound would be issued by the Bank of England, and both the Bank of England and UK government state that we are still some years away from any possible CBDC in the UK because of the lengthy process they need to go through first, with legislation, etc., which I've just mentioned. However, all political parties are currently in favour of proceeding with work on the digital pound, with Labour releasing a report on the 31st of January 2024 detailing their plans to continue work on the digital pound. So nothing is likely to change regardless of the outcome of the next general election. So we've looked at the UK government's plans to introduce a digital pound, but are there actually any advantages to it at all? Well, one positive, given that this channel is based on crypto education, is that the digital pound would be using new blockchain and distributed ledger technologies and smart contracts that are obviously used in crypto in order to increase convenience for businesses and individuals and to reduce the cost involved in transacting. And here you can see the design principles for the digital pound, which include aims such as interoperability, scalability, and privacy, which you can often see with crypto blockchains. Another stated advantage of a CBDC would be essentially to cut out the middlemen, which are normally banks, by the central bank issuing the currency themselves, which could therefore, in theory, reduce fees and increase efficiency, but only if it's operated in a certain way. Because the other way of looking at this is that the central bank in the Bank of England wouldn't be able to run a digital pound by itself, so it's going to have to outsource some of the work to third parties anyway, and in this case, that will be private companies, because another stated aim of the digital pound, as we just saw in the image, is innovation through private companies running the wallets and processing transactions for the digital pound. So they may look for companies with expertise and experience with blockchain technology, etc. here. But the downside is that this would also increase the risk of things like users' data being stolen, hacked, etc. And we're not even at the disadvantages yet. The Bank of England and UK government do mention the possible use of stable coins with the digital pound, which may be interesting moving forward. And finally, this could be seen as an attempt by the UK government to simply protect its currency, the British pound, which hasn't done well in the past few years, because more people are investing in cryptocurrencies and many other countries are looking into CBDCs. So they could be looking to keep the UK competitive, prevent the loss of the British pound abroad through investment, and try to encourage innovation by adopting these new technologies into our existing financial system, with the Bank of England issuing this new digital pound. However, at its core, the largest and most fundamental concerns people rightly have over CBDCs are privacy and control, because we already have very little of these, and it will depend how the UK government intends to roll out its digital pound and implement this. For example, they could take a leaf out of the cryptocurrency industry and look at incorporating ZK or zero knowledge proofs to ensure anonymous transactions, or even offer offline transactions, or adopt more of a decentralized system. And I definitely can't see that one happening, because the UK government will want to track as much as they can, which they're trying to do anyway in the crypto industry, which I've covered in previous videos. But just as a point of reference, South Korea announced in 2022 its CBDC plans using something called BBS Plus signatures, which support proof of knowledge. And the aim here is essentially that they use commercial banks to process the transactions and manage the accounts, but the user has the option to apparently keep some transactions confidential from the bank. But on the other hand, we could have a system that's completely centralized, which is certainly more likely if we're being honest, with your funds and account being controlled, accessed, restricted, and even having it confiscated, depending on what governments or central banks decide they want to do. Because they would be able to track all of your information, see what everyone is doing with their own money, freeze your funds for things like tax purposes, and use this as surveillance essentially. So with crypto, for example, you might be further restricted in terms of what you can buy and sell, how much you can invest, etc. And they would be able to simply halt your account if you try to exceed this or do something different. But it could be argued that this happens anyway today, and they are planning to keep cash as part of plans for the new digital pound and state that they won't track users. But this could go further through social scoring, for example, where you could have a score that the government gives you, and you might therefore be denied access to certain services or opportunities if your score is too low based on your financial past or what you're spending your money on, for example. And this all goes against each individual's freedom and financial privacy, because ultimately the argument here is, if I offer value to someone else through something like a service or have a good that they want, then why does a centralized authority have the right to track this, control what I then do with the money I receive, and then take some of this money as a tax from me? And while the Bank of England and UK government have stated that they won't have access to individuals' data, the private firms operating the wallets will. So is there any real change to what we have now with that level of centralization, is the question. And you can see here the model for the digital pound, with the third one down on the left mentioning private operators of wallets. Worryingly though, you can see towards the bottom on the right hand side that there would be a limit for how much digital pound you would be able to hold and transact with the report stating that this limit will be between £10,000 and £20,000 initially. This is apparently being implemented to stop bank runs, which could collapse the banking sector and cause a lot of financial pain if a lot of people wanted to move towards the digital pound that would be issued directly by the Bank of England, and therefore cutting out the banks. There would also be no interest paid on the digital pound. So to summarise, the UK government and Bank of England are proceeding carefully with the creation of the digital pound, and on the face of it, many of the steps they're taking seem to make sense and are measured, mentioning things like preserving people's privacy and needing to educate and build trust in the digital pound before introducing it. And given that they're keeping cash and existing forms of payment, you could, certainly at the beginning anyway, just opt not to use it if you wanted to. But I would personally have large misgivings about the future and where this could lead, and would encourage as many people as possible to have their voice heard if and when another public consultation is released. It is still questionable why a digital pound is needed, given the risks of it, other than the obvious advantages stated earlier of speed and possible reduced costs. As you can see here, which is agreed, by the cross-party Treasury Committee, let alone the individuals and businesses who were part of the 50,000 responses to the public consultation. And we're unlikely to see a decision on whether the UK will get this digital pound until about 2025 or 2026. So that ends this video on the plans for a UK CBDC. But as always, I'd love to know what you think in the comments below. And if you are interested in more of a tailored approach to your general crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your crypto journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.